Hey, what's up, traders? Thursday, March 9th, 8:48 a.m., and here are your morning ideas. Okay, gang. We continue to to balance down here after the trend down day on I believe this was Tuesday was the trend down day, and if I make this if we look at the big picture, here's the big picture here. Where are we, guys? We're right next to the most traded price again. And this is very, very common in these areas. We've been here for almost 1 year. I keep talking about the 39.70 area. That's moved up to like 39.75 is now the VPOC. It was like 67 before. And we're trading right on top of that. Now, I know that we have in the recent days trended down, and we're looking for, let's go to the small picture here, or you can even see it here on the 4 hour. Let's look at the 4 hour. Is that you get this big move down, and then we get this flag, and then usually we get some kind of a continuation. However, the context of this particular situation, this is why understanding context is so important, is that the jobs number is on Friday, which is tomorrow, at 24 hours from now. It's at 8:30 tomorrow morning. Non-farm payrolls. It's going to give us a the next key indicator for the Fed to act on. The Fed, you heard Powell this week after Monday talking about the interest rates would probably go up more than even that they expected because they still have to do something about inflation, and the jobs report will indirectly, or I guess you could say directly, affect that, because if the jobs number comes back and it's good, maybe that the Fed will say, okay, like the economy's strong enough from a jobs perspective that we can raise the rates and the market will be okay. If that happens, if the jobs number is good, we may see the market fall because now the market's pricing in higher rate hikes. Again, I don't know. I do know that you can see that there's been a lot of talk about the bonds lately. Here is the 30-year. It's relatively flat over the last couple days. Reading a lot of headlines about the bonds being pricing in a recession, the lowest the worst yield curve since like 1981. I read yesterday. So I'm not a bond trader. You should probably go to a guy that knows more about the bonds. The correlation between bonds and S&P 500 it changes quite a bit. It's not as easy as the old days where bonds up, equities down, and vice versa. There was a positive correlation during quantitative easing. So I think that those correlations, the problem with trading intermarket analysis and expecting it to always be the same is that those correlations decouple sometimes. Okay, so sometimes that stuff gets challenging. We don't talk about that a whole lot in here, but if you're following a bond trader, they may have better insights. However, I do know that this number tomorrow is pretty big. We do have good volume overnight at 100%. We got a big bump here. There wasn't any news, so I don't know what that really was. But we remember we're still sitting here right near that 39.70 area, which is the VPOC for this large area right here. Okay, so I wouldn't be at all surprised to see us trend down today and continue the move from Tuesday. I also would not, or Monday. I wouldn't be surprised. That was Tuesday. Excuse me. I wouldn't be surprised to see this market bounce off of 39.70. I don't know that I don't know that I expect the trend either way. I think it'll be more of what we saw yesterday, where it looks like it's going to break out, comes back down, looks like it's going to break out. So we get volatility, but we don't really go anywhere in front of the jobs number tomorrow. So that's what I'm looking for, guys. It's kind of hard to trade that when you see these big, strong moves because you think that it's going to break out, and then the market just kind of comes back into the middle. So again, I think that this is a day you got to be careful. Size down, widen out. I think that there will be some volatility with the volume pretty good, and then the jobs number tomorrow. Okay, guys, we'll be back first thing in the morning to talk about that jobs number. I hope you guys all have a great day.